A lot of news out of China in the past 24 hours that shows that the world's fastest growing economy is slowing a little bit. Joining us now over the phone with his reaction to some of the data points, David Riedel. He is the president and founder of Riedel Research. He has been analyzing EMS trends, emerging market trends for the past 15 years with a focus on Thailand and on China. David, so glad to have you with us this morning. What is the most important thing that you've seen out of China in the past 24 hours?
Well, two things. First of all, consumer spending continuing to rise nearly 18% over last year. That's where the Chinese government is driving the Chinese economy. That's the number to watch. Secondly, inflation, because that's the one thing that could derail consumer spending and this growth into a consumer economy. Remember that in China, when they calculate CPI, it's 34% of that basket is food prices. So when you see food prices up 6.8%, dragging that inflation number above the government target of 3%, that's something we need to keep an eye on. But so far, it's a slowdown, not a meltdown, and that's an important thing for investors to remember.
A slowdown, not a meltdown, David. I heard you just make your point there, but what about all the China bears who are out there now, who are pointing to a potential bubble and burst in the housing market, saying that certain sectors of the economy are slowing down?
Of course, certain sectors of the economy are slowing down, and that's a managed slowdown. The government initiated a huge stimulus at the beginning of last year, and of course, we're anniversarying some of those high growth periods at the end of last year. I am not a believer that there's a bubble in China, whether it's in property or in stocks. It's a big country with a lot of housing demand. There may be little pockets of high-end residential in Beijing or Shanghai, which are overpriced. But right now, there's a tremendous demand for affordable housing on the ground in China. Our analysts are seeing it. Our contacts are seeing it. Our surveys are uncovering it. It's really a very robust economy and a very robust demand economy.
David, I know you say you don't believe that there is a bubble or a crash coming as far as real estate goes, but do you think the Chinese government shares your view? I mean, they've basically banned people making or taking out third mortgages. They've increased the cost of even getting a second mortgage. They've told banks to do stress tests for double the amount that most strategists were. It seems like maybe the government is a little concerned.
What the government wants to do is they want to reduce the profit margin on high-end residential, serviced apartments, luxury apartments, things like that in the Tier 1 cities, Beijing, Shanghai, and so on and so forth. They want to drive developers down to affordable housing where there's tremendous demand across the country. Sure, they want to dial down the real estate speculation, and they want to have people focused on having one affordable home that they can live in and enjoy for themselves and their family, rather than use it as a way to make money. But you continue to see property prices up, over 10% in this most recent reading. There's still quite a lot of demand for real estate across the country. The government's doing a good job targeting just the sector that they want to, which is that high-end residential.
David, we thanks so much for your time, for your thoughts. David Riedel joining us there.